gold is the only commodity, and it is a commodity-based currency, that actually fulfills the original 4 functions of money, which is a tool of measure, a tool of barter, a short-term store of value so that you're fairly paid for your labor today, and a long-term store of value so that no matter when you use that money, you are always fairly paid for your labor. Now, with a commodity money like gold and silver, well, that takes labor and energy to pull out of the ground and then mint it, etc. So you're really trading your labor for somebody else's labor. But if a government wants to tax you, it's obvious, you know about it, and you might not agree to it. So they transitioned the system into fiat, and fiat is the definition is by decree, which means that it is a government legalized money. And they knew that not one man in a million understands inflation, but inflation was a key component of the new fiat currency. For corporations, they wanted to pay you less. But if you're used to getting 10 bucks an hour, you're not going to settle for 5. If, however, inflation can make that 10 bucks spend like 5, well, now you're actually agreeing to work for less, but you don't even realize it. So as an example of that piece, because it causes nominal confusion, but as an example of that piece, the average wage in 1971 was roughly $9,500. And a family of 4 could live on that. I'm not saying they were super loaded, but they only needed 1 wage earner to support that family of 4. Today, the average wage is something like $57,000, and it takes 2 wage earners. You're still paycheck to paycheck. And let us not forget the stimulus that they gave you. What you had to be made, you could be making $150,000 or less. So you've got to understand that while you would say, well, I'd much rather have 57,000 than 9,500, what that currency would buy in 1971 could support a family of 4. Today, that can't support barely anything. I mean, you are paycheck to paycheck. The central bank digital currencies would actually eliminate, according to the IMF, the International Monetary Fund, would eliminate even the short-term store of value, because there are no limitations, their words, not mine, no limitations on how low they can push interest rates. So now you get your paycheck, it's deposited directly into your bank account, and it immediately starts losing principal value because of those negative rates. And now money is down to 2, count them, 2 functions from 4, which is simply a tool of measure and a tool of barter. And this, where gold is really, it's centralized, it's decentralized, and it's invisible. You hold it, you own it outright, it runs no counterparty risk, and it has been a proven inflation hedge over time, as well as protection in geopolitical storms, which we've got a lot of those now. But it gave the power to the population, because if you did not like what the government was doing, you could simply walk into any bank with a $20 bill and pull out an ounce of gold. When a central bank today, when a central bank makes a policy choice, it takes roughly 18 months of going through the system before they know that they got what they wanted. So all of the interest rate increases that they put in last year, we haven't felt the effects of them yet, because it's still working its way through the system. Now, we go into a CBDC that is completely programmable without any privacy, right? So they can tell you how long the money is good for, where you can spend it, where you can't spend it. They can control how, they can control every aspect of it. If they don't like something that you say, they can just push a button and cut you off. And the other part of it is when you have gold and silver, well, that's a hard asset, takes energy and labor to pull out of the ground. It's easier with cash and bills because they've got printing presses. You go into CBDCs, that's even easier because they just push a button to create as much money as they want. And every time they do that in both of the fiat systems, because CBDCs are certainly still fiat, but both of the CBD systems, every time they create new money, the purchasing power value of the money that's already out there goes down. Everybody is already kind of a little uncertain about what's happening. So you bring in the next big crisis, which I don't think is too far away. And what they'll do is they will just push a button. Everybody already has their FedNow accounts. I don't care where you are in the country, even in rural areas through the post office, and you have money in there. That's how they're going to introduce it. History is the best predictor of the future, right? And there's silver and gold, and then there's silver and gold. So it depends. They're all different kinds is my point. And in 33, they took the gold away from the population. In the 60s, they took the silver away from the population. But there were forms of it. That's why I only do collectibles, to be honest with you. If you can hold it inside of an IRA, which is so easy to confiscate, you don't want to buy it. Regardless of your perception, if you do not hold it, you do not own it. It is a contract. And anything that is a contract runs counterparty risk. You've got to know 100% that the person or the entity on the other side of that contract has the ability to live up to their word. Well, ultimately, history shows us that we will, to a degree, but let's talk about that. Just kind of re-ask me that. But let's talk about the gold confiscation, because people, if they say, oh, that can't happen again, well, then that's just hopium that is not historic, right? Even currently, if you look at Ghana, they just instituted it. Now, they don't call it confiscation. They call it a levy or a tax, or there are all sorts of different ways of a confiscation. But they are forcing every miner to deliver to the Ghana central bank 20% of their production at the local currency,